Let's get oriented. I'm Lázaro Ulloa, owner and founder of Ulloa Financial, and this is your market compass for the week ahead for Monday, April 27th, 2026. Last week was a market that tried to move forward but kept running into the same pressure. We started the week with momentum from the prior Friday's rally, but that strength did not fully carry through. The biggest driver was still energy. Oil remained elevated following the continued tension around the Strait of Hormuz. Even though prices pulled back from recent highs, they stayed high enough to keep inflation concerns front and center. And that matters because energy is not just a headline. It flows directly into transportation, production costs, and ultimately what consumers feel every day. At that same time, interest rates stayed elevated. The 10-year Treasury is now testing the 4.3% level. We've seen 4.25% acting as a ceiling in the past, but moving above that begins to act like a real valuation tax, especially on growth and technology stocks. So even on days when equities tried to push higher, that combination of elevated oil and rising yields kept the market from gaining real traction. Earnings season also picked up. Results have been solid overall, but the tone remains cautious. Companies are showing resilience, but they're not showing confidence. That distinction is important. So here's the key takeaway from last week. The market is not breaking down, but it is also not moving forward with conviction. It is holding in place, waiting for clarity. Now let's look ahead. This week is where the market starts forcing answers. First, earnings acceleration. This is the Super Bowl of earnings. Alphabet, Microsoft, and Meta report midweek, followed by Amazon and Apple. This is where we find out if the massive investment into AI and infrastructure is actually translating into real cash flow and sustainable growth. Second, the Federal Reserve. The Fed meets this Wednesday. Markets are expecting to change in rates, but the tone of Claire Powell's comments will matter significantly. If the Fed signals concern about the impact of higher oil on inflation, volatility could increase quickly. Third, inflation data. We get the PCE report on Thursday. This is the Fed's preferred inflation measure, and it will be one of the first clear looks at how much the recent energy surge is feeding into broader prices. Fourth, interest rates. That 4.3% level on the 10-year remains critical. If yields continue to push higher, it tightens financial conditions and puts pressure on equities. And fifth, energy. Oil is still the swing factor. If it stabilizes, the market can find its footing. If it rises again, inflation concerns come right back into focus. Now let's bring this back to you, because this is where all of this really becomes real. Oil prices do not stay in the market. They show up at the gas pump. They show up in groceries. They show up in transportation and everyday costs that slowly reduce how far your income can go. And when interest rates stay elevated, borrowing becomes that much more expensive. Mortgages, car loans, credit cards, everything becomes more costly to carry. So this environment is not just about the market. It's about your cash flow, your purchasing power, and your long-term financial stability. This is where discipline matters. If you have higher risk tolerance, stay selective. Opportunities do exist, especially in areas showing real strength, but chasing momentum in a market like this can expose you very quickly. If you have a lower risk tolerance, stay anchored. Protect liquidity, manage your exposure, and make sure your financial plan can withstand continued volatility. Here's the bottom line. The market is still in a testing phase. Earnings are holding up, but energy, inflation, and interest rates are all applying pressure at the same time. This week will also help determine which side wins that tug of war. Stay focused on what matters. Watch earnings. Watch the Fed. Watch oil. Watch that 4.3% level. And most importantly, make sure your decisions are aligned with your long-term plan, not short-term noise. Stay oriented, my friends, and elevate your legacy.